You're smart, you're analytical, you aced the exams, you crushed your career. So why, when it comes to investing, do people just like you often make the most catastrophic mistakes? It's not a lack of intelligence, it's a psychological trap. It's the overconfidence bias. And today, we're going to expose why this single bias is the #1 reason smart investors fail. Welcome back to the Mindvist. I'm Dr. Mindvist, and I'm here to help you master the most complex market of all, the one between your ears. In the world of behavioral finance, we study the disconnect between what we know we should do and what we actually do. And nothing illustrates this better than the story of Alex. Alex was a brilliant software engineer. He could see patterns where others saw noise. When he started investing, he applied that same analytical mind. He read the reports, he built his own models, and he had a few early, spectacular wins. Those early wins weren't just money in his pocket. They were a poison in his mind. They inflated his sense of skill. He started ignoring the advice of his financial advisor. He stopped diversifying. Why hold a basket of average stocks when he could pick the one winner? He began to trade more frequently, buying and selling based on gut feeling, convinced he could time the market better than the professionals. This is the classic symptom of overconfidence bias, excessive trading. Then came the inevitable. A market correction hit, and the single sector he was heavily invested in plummeted. His brilliant conviction turned into a devastating loss. He doubled down, convinced he was right, and the market was wrong. Another hallmark of the bias. He didn't just lose his gains, he lost a significant portion of his principal. Alex, the brilliant engineer, was blindsided, not by the market, but by his own mind. So, what exactly happened to Alex? He fell victim to the overconfidence bias, which is the tendency to overestimate your own abilities, knowledge, and the accuracy of your information. It's a fundamental part of human psychology, and it's amplified in the investing world. Why? Because when we succeed, we attribute it to our skill. When we fail, we blame bad luck or external factors. The data is brutal. Studies have consistently shown that overconfident investors, particularly those who engage in excessive trading, underperform the market. One famous study found that the most active traders, the ones who think they're the smartest, earned annual net returns that were significantly lower than those who traded infrequently. Why? Because every trade has a cost, and every decision introduces the chance for error. Overconfidence manifests in two key ways. 1. Overestimation, believing your knowledge is superior. This leads to poor risk management and concentrated portfolios. 2. Overplacement, believing you are better than the average investor. This leads to market timing attempts and investing mistakes. Remember the statistic. Most people believe they are an above-average driver. The same applies to investing. The good news is that recognizing the bias is half the battle. Here are 3 actionable steps to protect yourself from the overconfidence trap. Step 1. Create a decision journal. Before you make a trade, write down why you are making it, what your expected outcome is, and what evidence supports it. This forces you to externalize your reasoning and review it later, honestly. Step 2. Practice diversification as a discipline. Don't view diversification as a sign of weakness, but as a sign of wisdom. It's the ultimate form of risk management. Step 3. Embrace the I don't know. The smartest investors are the ones who know the limits of their knowledge. If you can't explain why a stock will outperform in 5 minutes, don't buy it. Alex's story is a powerful reminder that in investing, your biggest enemy isn't the market, it's the person in the mirror. Intelligence is a tool, but without the humility of behavioral finance, it can become a weapon against your own wealth. Don't let your smarts lead you to make classic investing mistakes. If this video helped you recognize the overconfidence bias in your own life, hit the like button and subscribe for more insights into investor psychology. Let me know in the comments, what's the biggest investing mistake you've seen caused by overconfidence? We're building a community of humble, successful investors here. Thanks for watching, and I'll see you in the next video.